Good afternoon. Welcome to my November 21st, 2023 market review. Now, I'm going to give you a long version and a short version. The short version is we did something absolutely insane. It's not something to be expected. It's more something to be seen in the charts, kind of acknowledged, and just like check Roger, see that it's there. Don't do a whole lot with it. All right. This is not something that you want to be touching right now. Very, very touchy. I'll show you why. So let's get into the charts. Let's take a look. So we see right here both types of illiquid market. What is an illiquid market? It's a market that doesn't have a lot of orders really either queued up in the charts or what's that word? Or placed into the market. So the first type of illiquid market that we see, it's actually less common. It's more common to see this in a comparison between Nasdaq and the S&P. You don't see that. You don't see it as strongly right now because both of these markets are illiquid. But with a liquid market, basically what you have is you have orders stacked up to the top and stacked up to the bottom, stop orders, limit orders, those kinds of things. There are other kinds like iceberg orders and things like that. And those are going to, what's the word? Those are going to suck up really the market orders, and they're going to kind of put the brakes and kind of stabilize normal price action. So what we see here is basically similar to what we saw yesterday. Let me show you yesterday right here. You can see that I was able to just project straight up with no resistance, nothing, right? So what's going on right here is basically the same thing, just the other side of the market. You'll notice that has a lot more wicks and all that kind of stuff though. So if you see the when you hear ICT talk about how smart money likes to buy in down candles and sell in up candles, it's more or less this is how they buy, this is how they sell, because they have to push price. When they enter their positions, they have to push price one direction or the other. But they kind of they let price overshoot their average, and then they kind of get into the market after that. And the way that they do that is they get in a little bit and they let price stabilize, so that way they can get in a little bit and they can let price stabilize, and in that way they're able to kind of feather in their orders without causing too much of a without changing their average too much and eating away their profits. So either way, this still is just like in a liquid market. It's still pretty much just straight down, no resistance, just like this was straight up, no resistance. But there's also another type of illiquid market, and that's when you don't have interest in the market orders either. So this is no passive interest, right? So there's no orders stacked up in the market to stop price from moving. And this is more of an active interest. As soon as the 1400 news hit, that was a JPAL thing, that was a FOMC thing. Not FOMC proper, but still very impactful in the market. You could see it just completely changed character right there. Completely flat. No movement at all. If you saw that live, you would see that it was just a very, very slow meandering. Like there was like one transaction happening every 2 seconds. It was slow. It was slow, and that the market just kind of transitioned into that. It just kind of changed right on the dot at 1400. So yeah, so both of these things, they're basically the reason that I don't want to be involved in this. You can see this, or this upswing. That wasn't something that we expected. However, that was according to plan. So once I saw this, I really did expect much more upside. I expected us to come up and tag this, possibly even this. which these are both highs, just like this is a high, right? This is like a high on the weekly chart, isn't it on weekly? Let me see. No, it is anchored on the daily chart, right? These are anchored on the weekly. So I really expected those highs to get tagged out. The fact that we did this, this is completely against plan. This is completely against really anything that could be reasonably expected out of a market. I know there were some people who were in short on this. I know there were some people who were in short on the top because that really does kind of look textbook. If you were expecting price to turn around from here, from breaking this high, but obviously we were not doing that. That's not based on this higher time frame. Let's go on the 4 hour. Based on this 4 hour premise, that was really not reasonable to see it come back down here. And now that we have FOMC behind us, well, not FOMC proper, but the FOMC minutes, it's going to be really difficult for us to justify getting up here and taking out these highs, right? So if you look at this position, normally under normal market conditions, this is basically coming back to the original consolidation. Then you buy it and it runs up, right into your targets. Does that make sense? That's because that's something. Well, that's something that would normally happen. That's not a what's that word? That is not unreasonable to expect out of a market, especially out of the equities market specifically, especially out of a consolidating market. However, because of just how illiquid our market is, just because of the holiday that's happening, because of the holidays that we have coming up, this is going to be very, very illiquid. And what does that mean? That means basically we can do what we did today, just every single day, all the time. Every time a news event comes around, we can just completely change stories, completely change what we're doing, right? So since we are illiquid, that means that we don't need to chop around and collect these from here. That means that we can keep running, keep charging, and we can collect these, and we can collect these with no resistance. Since we dropped off here, now I have no idea what we're doing in the marketplace. Does that make sense? Because this is not these types of markets, they don't really follow plans. Well, as long as they're following plans, as long as they have momentum, they're fine. But once they change even a little bit, all bets are off. We don't know what's going on. So that's just something to keep in mind about this November market. November market going into December. So if you look at the Dixie, we'll see that we finally got a retrace through November. Oh, excuse me. So through this particular time, we don't want this. We don't expect this. We don't like seeing it just kind of charge through, especially since we have no liquidity holding us back, right? We can just go wherever we want on the charts. It's completely cost effective. It's perfect. And in fact, it's advantageous for the market makers to just run it to wherever they want it to go, right? So we should see, we should have seen, if the Dixie was not done with what it's doing here, we should have seen it just keep charging and just running through this low, right? Does that make sense? Because there's no liquidity holding us back. It's just very cost effective to just power through the DOM and take out these lows, right? But of course we didn't do that. So this is actually the least efficient thing that they could do at this time if they're trying to power through these lows. So just keep that in mind. That's kind of a warno on the Dixie. Let us check our bonds. Do a status check on these bonds. You can see that they came down, obviously, same as the S&P. Still looking on breaking that order block, right? That's really. Well, we can see that. we can see with the bonds that they've accepted the consolidation. They like doing this chop up and down right now. So I know I'm just internalizing it. I'm just accepting that this market is flat right now, and we can't really do anything with it. We can look at it. We can identify things in it. We can try to do silver bullets. We can try to do all kinds of stuff. Now the silver bullet, I do believe I did try to take that one. I was unsuccessful at getting the particular fair value gap. I saw it, but we were already past, so I was looking for another one. Let us do. I believe I used this one. Yeah, I used this one, and I actually entered here in this volume imbalance, and I ended up having to mitigate this position. No, no, no. So we shorted. I shorted this one. I shorted this one, and the reason was because we had such. Um, we were so illiquid that banking on price to just kind of turn around and go parabolic. Banking on price to just turn around and go parabolic one way or another was it's just not a particularly smart thing to do. You would want it. You would want to expect it to just drive through whichever way that you're going, and whatever the inception of your move is. That's just kind of the direction that you want to expect it to go, and you want it to, and you want to see that there's unfulfilled objectives here, right? so so tried for the silver bullet, tried to short, wasn't able to see enough conviction to the downside, so I cut that one loose, and then I tried to long. Now the thing about this long, I was looking at this consolidation. I was considering this kind of a no, it's not like an original consolidation, but kind of a benchmark. So if we didn't have the interest to move above this consolidation, I was going to cut it loose. And by the time that I did not want to see it rejecting this, so once I saw a little bit of rejection, I just kind of cut it loose. I didn't want anything to do with that. And that's just because this is a very, very dangerous market. If it does anything that you don't want it to do, anything that you're not expecting out of it, if it goes off the rails like one time, which it will do it very often. Granted, it will do that very often, but it can easily just rip your face in the other direction and run through your stop, not even caring about it. So you could lose the trade, and you can actually lose a whole lot more money than you have to lose, just because your stop's not going to work, because this particular market can be so fast when it does its reversals and does all this stuff, right? So so just be advised of that. That's why I was treating today the way that I was treating it. It's not because I didn't believe that it was going to be able to get through it. It's not that it was printing. It's not that it wasn't printing things that were conducive for it getting through to its objectives. It was just that this market can just turn on a dime without any warning, without any anything, basically, and it can just run through whatever it wants. So that's that. Let's take a look at crypto. Crypto class. Yes. So we want to 15 minutes. There we go. So as we can see, crypto's not doing too hot, but it's actually doing a lot better than it has not made a decision. Okay, so at this point in November, we want to see it having made a decision if it's going to be trending up or trending down. So my suspicion is that we're just going to be consolidating until whatever the Dixie is dealing with right now, it works it out with the rest of the world. So I expect just more or less sideways movement with the crypto, and just beating things up like that, like you see in the charts. How it beat up the lows, and then it beat up the highs, and then it just kind of settled in the middle, building sentiment, confusing people, making people mad, um, all sorts of things that you really should not be. Um, all sorts of things that you should not be participating in, that you should not be partaking in, unless you are um, of that mind that you can deal with that, and you can be in the market and out of the market very easily. You can plan ahead. You can understand where your limits are, and you know that when price really starts running against you, you just get out, right? If you're not that way, if you're not careful and if you don't understand the limitations of price, you need to stay out of markets like these. You need to step back. You just can't work them. You can't do it. It's not going to be possible, right? Because why? These are consolidations. This is what? This is seek and destroy, right? What happened in Solana? Okay, not quite seek and destroy, not quite, but this is still a consolidation. This is technically a down day. Don't get me wrong. Um, Technically, it printed a high and then it did lower lows, lower highs, lower lows, lower highs, right? But don't kid yourself. That is a consolidation, right? Rigorously, obviously, down day, right? Downtrend. Agreed, right? But look at that. Is that a down day? Does that make sense for a down day? No, that makes sense for a consolidation. So yeah, yeah, we are in consolidation. We're not in downtrend. We're not in uptrend. We're just doing nothing basically. So let's take a look at the euro. Euro was beautiful. Right? If you were a euro trader, you did great today. Props to you, bravo. Um, so let's check our commodities as well. I have a status update on cocoa, which I would like to show you. The cocoa is going to be really exciting. Crude oil looks like it's recovering. Maybe. I wouldn't trust this. I would not trust this just because of how they're manipulating it. You see that? No, maybe. Let's take a look at the daily. Okay, yeah. So the daily we now have an order block on crude oil. So this is gonna be fantastic. There we go. Perfect. Okay. And it's gonna be yellow because the yellow is our order block color. There we are. Okay. And then check our agriculture. I don't have a lot of news for corn or rice, but for the cocoa, let me show you something. So this was when did we do the market review? Let me check. So our market review was on the 18th, right? That was when we did our top down. Check out what happened on the 20th. Okay. No, that's the daily. I'm sorry. So it is the daily. Check out what happened on the 20th. We dug down into the upper half of this order block, and then we shot off. Isn't that interesting? Isn't that cool? That looks very neat to me, right? So basically, this is usually how these commercial bull markets happen. When they do take discount, it's usually very, very shallow, and then they just shoot off, and then they're off to the races. They're gone. You can't really get to them. So yeah, seeing them respect these order blocks, seeing them give us ICT's idea of an entry, that's fantastic. That's fantastic. That's actually a lot more than we would have demanded out of this market because these these runs they don't usually take discount very often, and when they do, well, like I just said, it's very, very shallow. So yeah, it dug in, it shot off, it's looking great, love it, right? So that's why we this is the kinds of moves that we're looking for when when we're looking at a commercial bull market and we're looking at one that's just starting to roll over. It's just really really powerful. We can also see it running in rice. Yep, and this is really more your expectation to just see it running with no retrace, no nothing, because where would it have come back to? This fair value gap, right? But it did not come back to that fair value gap. It just kind of ran off. So basically, keep that in mind when you're tracking commercial bull markets. Corn, corn didn't really do a whole lot. I do kind of expect this to start to rocket off. Maybe it will take the liquidity, right? Maybe, but I don't really expect it to stay in place. You know what I mean? I expect this to displace rather soon because we're going into the winter months, so corn is going to be very difficult to get our hands on, right? Um, no, it's not difficult to get your hands on. It's just that it's done. Hmm, is it done with its harvest in the winter? Yeah, it's finished with its harvest in the winter. So there's a finite amount of it. It's not like it's really cheap, like it would be in. I don't know where I'm going with it. Basically, corn. I'm expecting it to rocket off. There's not really a basis for that expectation. It's just kind of what I expect it to do. It's mm, no, there is a basis for that expectation, and that's just because of our positioning and because of the time of the year, and because of what we're seeing in the contract months. But yeah, I really do expect corn to start rocking out pretty soon. So basically, stand by for that. Um, don't jump in. Now, the reason you shouldn't jump in is because of what we're seeing in the indices, in the crypto, and in all of these like T notes and things like that. So the problem with what's going on with these futures contracts is they had they had a recognizable music going, and then they just kind of stopped it, right? They took a complete left turn, and then they completely went silent, and now they're doing a whole lot of nothing. So let's say you're listening to some music like I don't know, Flight of the Valkyries or something, and you hear that chorus like dun 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 dun, and then all of the instruments drop out. You just have like a trumpet and a trombone or something. Dun 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 dun. Going fine, you know. You think it's all right. You think it's good. You think they're gonna keep going, right? Because they could just solo that, or they could do the duet or whatever it is with not very many instruments. But then dun 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 dun. They make this awful noise, and then they all put down their instruments, and then you just hear a clarinet just playing a B flat, right? The tuning note, and like 1/10, like 1/10 of the symphony starts tuning. The rest are just kind of sitting there, like staring at you. Which you're probably the one guy in the audience because nobody else goes to symphonies anymore. I don't know. I like them. They're cool. However, what comes next? What comes after that? If you have like 1/10 of the band tuning off a clarinet after they just kind of screeched out their actual song that they were playing, what comes after that? Nothing. You don't know, right? It could be anything. They could break back out. Or they could just start playing again. They could just kind of do nothing. They could just all get up and walk out. I don't know. I don't know what they're gonna do. I really have no idea, and um, that's basically what we have right here in the marketplace right now. We have all these holding patterns. None of these markets are listening to each other. Well, actually, um, it's it's not that they're not listening to each other. It's just that basically it looks like nobody's home. Nobody's in here doing anything. It's just they're kind of beating around doing nothing. As you can see, the on the left, the T bonds, they finally um, they have accepted their uh, they've accepted their consolidation. So pretty much they're the last ones. The S&P has accepted this consolidation, and the crypto, which should be in a raging bull market, in the music that we recognize and the music that we can understand, crypto would be in a raging bull market. It is not um, in the second idea that we might have had in our heads about what the market might be playing right now. S&P would be spreading its wings, reaching for its highs. Nasdaq would be reaching to pop out this high. It hasn't done that. It's taken a U-turn. It's just completely turned around, 180 right there. Um, so really, we don't know. We don't know what's going on. And if you think that you know what's going on, either you don't or you're kidding yourself. So it's just one of those types of markets. So now we really have to wait. If you really want to participate in this marketplace, stick to like the silver bullets and things. Stick to the biasless ideas, the ones that depend on volatility and predisposition of the marketplace to kind of drift to one side of the market. No, not those ones. No. Predisposition of the marketplace to do wide consolidations. Those are the ones they want. So like the silver bullet times, and once again the silver bullet times. Just stick to those until the market really starts to show us what it's actually doing. Because right now, I don't like it. I don't like what it's doing at all. Once again, we have our holidays. Thursday is the one day that I will call, and I expect it to be completely quiet, completely silent, just kind of drifting up and down a little bit. Kind of like what we saw after JPOW with. Let's go on a 1 minute actually to show you. Where's that 1400? Where's that 1400? Because you need the visual aid. You need this. This. So like from here on, this is the type of market that I expect from from everyone on Thanksgiving. Other than that, I don't have a prognostication. I have no idea what's going on. It's Man, it's doing some weird stuff. Not gonna lie. So it's just that its propensity under normal conditions, with an actual liquid market that has basically that has a liquidity that can stop it to the up and downside and create some kind of a momentum, make make a sort of a texture into the marketplace. Um, I can't I can't predict it. If it wasn't for the fact that this was a holiday and we don't really have a texture in the marketplace, it's just kind of a hard right turns, turning around 180 degrees, going from doing one thing to doing another instantly, which the marketplace does that already, but it usually has this kind of it usually has the transition moment, and then it has the actual transition itself afterwards. After the moment, you can see it like spool up almost. You don't get that with this market, so I have no idea what's going on with it. I can't really predict it. I can't really do a whole lot with it. Poking out highs and lows, maybe um, during consolidation times. That's really the best that we can do. So just keep that in mind. Stay safe. Stay out of the holiday. Um, Keep a watch out, or keep an eye out for when this liquidity comes back into the marketplace. Should be, and should it be next week? Let me see. Could possibly be next week. But yeah, maybe next week, the week after, we'll see when it wants to start behaving itself again. So anyway, until tomorrow, that's all I got for you. Thank you. Goodbye. Have a good night.